Let's welcome on board Naresh Mirani, Mayuresh Joshi and talk about what they're making of the markets right now. Naresh, hi, afternoon. Couldn't quite hold on to the highs of the day, but what is the sense that you're getting about this 100-point move on the index?
So a decent move if you look at the mid cap and the small cap indices. The mid cap index is up 1.1%. The small cap indices are up 1.5% or more. So the breadth is better. The bounce backs are good in the stock specific side. Index continues to remain under pressure because some of the heavyweights like IT as a sector has not picked up. You have HDFC Bank struggling around 1640. So for now, trying to form a base on the index, but a decent recovery on the broader markets.
Mayuresh, hi, afternoon. I guess lots is awaited this evening. You've got Reliance, Infosys, the two big ones. What is the anticipation? You think we can only safely say we're out of the woods once a large chunk of earnings is behind us? Because that, in some sense, is the true litmus test, right?
Afternoon, Ayesha. Oh, absolutely right. And again, I think out of all the large emerging markets that we track, earnings is going to be a big concern. And specifically because of that, earnings downgrades, India, Hong Kong, and China is something that we put under pressure as far as the market outlook is concerned. And therefore, I think how this earnings season plays out specifically and what corporates have to say in terms of the outlook ahead for 2025 is going to be extremely critical. Obviously, I think the global conditions is something that are beyond our control. And therefore, what Trump does once he resumes office, what happens to global inflation, what happens to core inflation within that data points. Yes, the number yesterday's reading came out relatively better. But generally, I think what is the trend? How will that play out on bond yields and therefore the interest rate cycle? I think all are relatively patchy at this point of time. And therefore, I think earnings is going to be a key driver, which we believe might remain soft. And therefore, markets, a large part of the emerging market universe might actually be under the pump. So I think you need to be extremely selective. I think this year is going to be a sector and a stock-specific approach for the markets. I think it's going to be a stock pickers market for 2020.
Mayuresh, a quick word on the Adani Group. Is there any stock that you would want to recommend on a fundamental basis?
Actually coming out to an end, right? I think the expectations in terms of the overhang that now remains with the court case, if that comes to some element of final conclusion over the next few months, I think the complete overhang will be gone from the group itself. The kind of resorts the group has to make in terms of ensuring that alternate sources of funding are probably available. Case in point being, as an example, selling their stake off in Adani Wilmar, projects getting called off. I think all that should probably normalize and things should be put to rest once and for all. Having said that, I think within the group itself, I think the strongest EPS rating as we map at Markets with India is Adani Ports. Obviously, the kind of volume growth that one really expects this company to post, the mechanized operations that it has, and the kind of acquisitions that it has done across smaller ports in the country, the volume growth should be significantly better over the next 2 to 3 years. Couple that up with expectations of global concerns coming to some element of conclusion will also mean that the exit rate should normalize going forward as well. You're still seeing a lot of container issues, specifically on the Middle Eastern routes. And therefore, as that normalizes, freight routes normalizes, freight rates normalizes, that would probably play out in terms of operating leverage on the balance sheet. And let's not forget the kind of excessive land that it probably holds in terms of its SEZ operations as well. Considering the EPS rating institution holding as we see canceling, Adani Ports probably something that we're keeping on the watches.
Well, for the markets, we are still around that 23,300 mark, but it's the Bank Nifty which is doing quite well, and the broader market space actually doing quite okay. In terms of the select names, the likes of GHCL as well as Tata Chemicals, they are actually moving higher in the last few minutes. Plus, some of the other chemical names have been in focus as well. Nagaraj Shetty also joins us on the show right now. Nagaraj, anything specific or any specific sector that is showing the maximum amount of strength right now and you would recommend as a fresh buy?
Hi, good afternoon. I think banking is the one showing a strength recently. And if you can look at the Bank Nifty has bounced back sharply from the lower levels. And I think there is a possibility of some more upside in the banking sector. But if you look at overall Nifty chart pattern, Nifty is still hovering around the resistance of around 23,300, 400 levels. Still, there is no clear indication of any upside breakout of the 23,300, 400 hurdle. And I think failing to do this, we might see some further consolidation around the resistance area. If Nifty moves sustains above 23,400 levels, then the more short covering is likely to come in the markets.
Right now, of course, it is the entire, insurance play which is currently holding up in trade. After HDFC Life reported its numbers, and a strong one at that, Macquarie came out with a neutral note. Jefferies, Investec, Nuvama have all put in a buy call. In fact, Nuvama has actually upgraded the target price also to now 850 on the stock price. But Naresh, any trend that you're picking up, and would you dabble at all in the insurance pack?
We are seeing bounce back only on the results as such. The structure is still weak. The only one where there can be some bit of a recovery is SBI Life, which has made a bottom around the 1380, 1400 mark, which was the support also for the last 1.5 year, and also the breakout point. And the stock has also seen a largest correction compared to the rest, say from 1900 odd levels all the way to 1400. So that's the stock which could make a slow and steady comeback towards 1600. And in the previous moves, it was always the leader. So SBI Life would be the most interesting play.
Okay, SBI Life, the most interesting play. There's also a JP Morgan note coming in on Q-commerce, wherein they're talking about the dark store updates. Zomato, of course, they maintain that overweight with a target price of 340 on the stock. Let's see what the intraday graph of that stock is, because on Monday it made that panic low of about 220 thereabouts. And from there, of course, we've already seen a recovery all the way to those 240 odd levels. CLSA as well came out with a note on Zomato this morning, adding it to the high conviction outperform list and overweight on that. Target price at now 400 from the earlier 370 is what they've pegged on Zomato. But Mayuresh, I mean, the debate clearly carries on whether you look at Zomato or do you go with a slight valuation comfort in Swiggy. What would you pick if you were to add fresh positions now?
So actually, I think honestly, the expectation is that Swiggy will start posting better set of numbers in the next few quarters. Because the management here says the food delivery business breaking even in the the third quarter of this year, and 2 quarters down the line, the quick commerce expected to break even as well. So how Zomato had committed a couple of years back and they walked the talk, the expectation largely is that if Swiggy's management is able to do that, and it probably shows in the numbers every passing quarter, the discount at which it is trading to at Zomato, even at the current levels, maybe there is some element of re-rating that probably comes through. And therefore, I think numbers will be extremely critical. If numbers keep on improving, my own sense is that Swiggy might outperform Zomato from a near-term perspective. Having said that, I think generally for the space, Aisha, I think the expectation in terms of both these players sitting on cash and plenty of cash, I think 9 to 10,000 crores for each of these players. Each of these players expecting to touch that 1,000 dark store figure milestone in the next couple of quarters or 3 quarters. I think it's going to be a significant addition in terms of their overall operations. And therefore, when we talk about competition, how Amazon will come in, how Reliance Retail will come in, or what Zepto is probably doing in the unlisted space, burning a lot of cash. I think competition will be a little bit wary in terms of burning cash at this juncture, because it is a cash burn business for a long, long time. And I think players like Amazon and Reliance Retail might not be enthused to probably burn cash in a significant manner on their balance sheets. And therefore, I think these players might continue gaining market share. These players might continue adding the subscriber base. Case in point, again, I think Zomato's average price in terms of an order value for the quick commerce business was around 660 odd rupees, 95 lakh customers transacted in the quarter. That number will only increase. EPS rating is extremely strong for Zomato as we speak, but they might go through some period of consolidation. But yeah, there are certain tailwinds for both these players.